Deputy Executive Officer of Insurance at the Financial Services Board addressed us earlier just on regulation and primarily SAM and the binder regulations. Jonathan Dixon is here with me at the International Insurance Conference. Jonathan, two questions for you. Professor Vivian, of Wits University has obviously been quite critical of the regulator. And he said to me earlier that he really thinks, the Financial Services Board's regulation is based on the FSA in England, which he called a failed institution. So why are we basing our regulation on that of a failed institution?
Thanks very much. Well, I don't want to talk too specifically about Professor Vivian, but I think the experience has been that where people have been critical of regulation, often it's because they don't really understand it fully, the approach that we're taking. So I think we probably need to engage a bit with Professor Vivian, because the fact of the matter is we're not basing it on we're not cutting and pasting it from a FSA approach. We've taken what we think are a lot of good ideas from other markets, but these are not just UK or FSA requirements. These are international standards. And we're largely informed by the standards developed by the International Association of Insurance Supervisors. They're universally applicable. And then we work very hard on making sure that we adapt those regulations to South African circumstances. And we do that by consulting with industry. And that's why we're in a position where SAIA, as the industry association, has come out very clearly and actually distanced themselves from Professor Vivian's comments to say we believe that regulation is important. It's important for policyholder protection, and it's important for a sustainable insurance industry going forward. And we work together with SAIA and individual insurers to try and develop effective regulations.
Fair enough. The second question is just a phrase that's often used, which is that this is first world regulation in a third world country. We do appreciate that South Africa is a part of the G20, and if we want to compete internationally, then our standards have to be on a par with international standards. But the reality in South Africa is so stark and immediate and desperate. What are your thoughts on finding that balance?
Sure. Yeah, I think balance is the real key word, and it's. But first to point out, these international standards are developed at a principles-based level. And the IIS said these are universally applicable principles. So they apply in whatever jurisdiction and whatever type of insurance. So our job is to make sure we take these principles and we apply them in a proportionate way. So in a way that is appropriate given the nature, scale and complexity of the risks that the insurer presents, the risks in the industry. And South Africa is a special case because we actually have a combination. We have large insurance groups that are internationally active and compete with the best in the world. We have medium-sized ones that are mostly domestically focused, and we have insurers that are also specifically focused on the lower-income sector and are doing fairly simple, straightforward insurance products. So that's why we've actually developed, in a sense, a tiered approach. On the one end, we've got our internationally active insurers. Some are very big and may actually have systemic importance in the South African system, where we will absolutely apply the global standards. At the other end of the scale, we're developing microinsurance to make sure we've got a simpler regulatory model for insurers that are looking at the low-income sector. And then in between, we have to find the right combination of regulation that gives us our outcomes that we want to achieve, which is good risk management, but not in a way that adds too much to costs.